Retail is a big market, $3.5 trillion. So even if Amazon is a third of the growth, there's still a lot of growth if retail sales are accelerating as they are this year, mainly due to the tax cuts and some good job growth. So Target's winning, and I think the real surprise out of their quarter was just how strong traffic was. I mean, it was the best traffic number in years. And at the end of the day, they're one of the ones gaining share right now because they're getting more customers to shop with them, both online and in the store.
You know, when we were talking about the death of retail, all these guys are going bankrupt. Amazon's going to destroy them. Look at how their sales are declining. And maybe now when we look at what happened this quarter, maybe it was just a meek and stinky economy and the consumer knew it and just wasn't into buying anything. And that actually the real story is that you needed an economic boom to turn these things around.
A strong economy and strong consumer helps. So if retail sales were stuck around 3.5 for the last 5 years and now they're growing 4.7% last month, closer to 5%, that will cover a lot of ills. However, I think there is one thing, it's not just with Target, you saw with Walmart last week, the companies are struggling to get any sort of margin expansion. In fact, even Target's margins were down a little bit this quarter. So I think you do have to keep in mind, economy's hot, consumers strong, but there are some risks out there, and one is that there's a lot of competition, in part due to Amazon, and we think tariffs are a risk if we don't go down the trade war path.
I do think it's interesting that gross margins now, consumers or investors rather, are okay with seeing some gross margin erosion because they seem to like the investments now that they can see some results for what's going on in the store and online. We talk a lot about having an online sale be more expensive than that same sale in store. And so if you're grabbing some share, maybe not from Amazon, but maybe from someone else, investors seem to be a little okay with some gross margin erosion at this point, but they weren't for a while, and they were treated much differently than what Amazon was, for instance.
For both of you, which of the companies that have reported so far, which one, either positive or negative, surprised you the most? In other words, which one did better than you thought they might?
I was surprised.
I was surprised about Kohl's.
And Lowe's, not. I thought Lowe's was going to get lifted like all the boats, and it seems to have been left behind.
Well, so I would, across the board, you've seen sales beats of, say, 100 to 200 basis points. I think where the separating the rubber from the road on that is which companies are able to leverage it, get some margin out of it or not, and then which ones got traffic. So I think of all the ones so far, Target's traffic number was the most impressive, up more than 6%. Then again, Walmart had traffic up over 2.5. So I don't want to start parsing one or the other. I think you have to remember, retail is so big and fragmented. I think that's the thing that people forget. I mean, Sears continues to fall every day. There are plenty of large companies like Sears that used to have 50 billion of sales that are now under 15 billion. That's where the share is really coming from.
JCPenney too. Yeah, I think Walmart for me was probably the big one. Yes, the numbers were bigger for Target, but we saw Walmart first, so maybe I was less surprised about what Target did. But still, pretty impressive, especially those store traffic numbers, which means as they grow online, and their online sales rate was at least the strongest in 3.5 years, because they haven't been reporting them for that long, that it did not cannibalize what's happening in store. And I think that's pretty powerful for Target because they're spending so much money on their stores.